Welcome, I am Ernie Goss. I'm a McAllister Chair at Creighton University in beautiful downtown Omaha, Nebraska, here with Creighton University's report for the month of August. Our report on businesses from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south. This survey that we've been doing for many, many years, it's a leading economic indicator, meaning what they're seeing this month, that's the month of August, we're going to see later on. That's those of us in the overall economy. Now, what did they see for last month? This is an index, again, that spans from 0 to 100. And 50 and above is growth positive, below 50 is growth negative. It's sort of like a canary in the coal mine. And again, when they see it today, we see it later on. That's the theory, and it's been holding up pretty well. Now, we hope it's faltering in relevance to now, because that index, the overall index, moved below growth neutral for August. That's not a good signal. Now, I have to say we are biased in terms of manufacturing, meaning we're oversampling manufacturing, and manufacturing has been weak. So that's one of the reasons. But again, there's no doubt about it. In this part of the country, with farming, agriculture down, energy down, that's pulling the overall economy down. Now, I'm not saying negative. I'm not saying negative growth. I'm saying right now slower growth in the weeks and months ahead. But it's focused in several states. How about Kansas? Negative. How about Nebraska? Negative. How about North Dakota? Negative. And finally, how about Oklahoma? Negative. Those states, those particular states, are negative. The rest of the 5 states are positive. Now, what do those states have in common? A lot more agriculture and a lot more energy. When you put them two together, particularly for North Dakota, that's not good. North Dakota is second in the nation in terms of energy and ag put together. Number 1 would be Wyoming. So now here I'll bring up the chart, and you'll see the chart there. And of course, I've got the Mid-America there in Creighton blue. The U.S. number will come out later on this morning. That'll be in Husker red. But anyway, that one's likely to be down as well. Now, will it be below growth neutral? I'm expecting it to move close to growth neutral. I don't think it'll move below growth neutral, though, the U.S. number. Ours was below growth neutral, but that was because of Kansas, Nebraska, and North Dakota, and Oklahoma. The other states very much more positive, particularly South Dakota and Minnesota. Here's a very interesting part to come out of this survey this month. Inflationary pressures index moved to its lowest level since the recession, since May of 2009. The inflation gauge, the wholesale inflation gauge. Now, that normally we'd celebrate lower prices. Not to be celebrated this month, and not to be celebrated in this period we're in, because the Federal Reserve is very concerned about disinflation. That's where the inflation gauge doesn't move into negative territory, meaning cuts in prices, but the price increases are coming down, and they're coming down mightily, and that's a big problem for the Fed. So I've been here hawking interest rates, saying the Fed would raise in September the 17th. I'm going to take it off the table now. I think it's going to be December before they raise rates. I think they should go ahead and raise rates. I don't think there's much danger of them raising rates in terms of inflation, in terms of slowing the economy. The economy is already slowing down. 0.25% is not going to hurt the economy. In fact, I would argue it will help the economy, and I'll tell you why. A lot of folks are out there not buying because they think interest rates are going to remain low forever. So they're not building that house today. They're not buying that house today because they think they'll have interest rates low forever. Get them off that expectation, Fed. Move higher. So that's it. The overall, so to sum it up, slower growth ahead, inflation rate coming down. We're likely to not see a rate hike on September the 17th. Now, what do you watch for other than our report, which comes out on October the 1st, I should say the first business day of October? The jobs report on September the 4th. That's for the month of August. That's the U.S. jobs report. Very important, because the Fed that's the last jobs report that the Fed will have, the open market committee of the Fed, to make a rate changing decision on September the 17th. That's going to be their last report. Again, I think it's going to be a pretty good report. they're still not, I don't think they're going to move on rates in September the 17th. They've been pandering. I think they're pandering. I think they need to be moving on higher rates, pandering to the stock market. I mean, this idea that you have to pander or move and satisfy the stock market, wrong, wrong, wrong. That's not what should be done. If stocks are dropping, they're dropping for other reasons. I say the Fed should move higher on interest rates. What else should you keep an eye on? On the September the 16th, the core CPI and the overall CPI. Core, of course, subtracts out food and energy. Look at that number. And that's interesting. The Fed begins their open market committee meetings on September the 16th. And of course, that's the same day the CPI comes out. Well, they announce their findings, or their conclusions, the next day, and that will be Janet Yellen explaining why she decided, and the Open Market Committee decided not to raise rates. Now, I know I've been on the side of a rate hike. I thought they would raise. I think it's going to be pushed off till December now. I think it should not be pushed off, as I said. Now, what are the risks to this economy other than what I'm talking about, a slowing U.S. economy, because manufacturing is slowing down, and we're seeing in energy and agriculture, anything connected to that, particularly also exports because of the slower global economy. Chinese stock market. I mean, who would have thought that? I mean, I actually said that last month. I guess some say even a blind squirrel gets a nut occasionally. The Chinese market is stock market. Now, I hesitate to even call it a market. They are manipulating that market, stock market, big time. They should step out of the way and let the stock market find a bottom. They are uncomfortable with it. They need to move out of the way, but they're not going to. So the volatility, keep an eye on that. It comes back to here in terms of our market. And then the Federal Reserve panics. The Open Market Committee says, wow, we've got to do something about this. No, you don't. The stock market is not the U.S. economy. Let the stock market, I mean, why is the Federal Reserve reacting to investors there? Because they're in Washington, D.C. They need to get out and go see the rest of the country and see that everything is not the stock market. And they are satisfying their East Coast buddies there, some of them. Now, there are some of the Federal Reserve presidents that are not, principally our Federal Reserve president, that's Esther George. She thinks we need to be raising rates. I agree with her. What else should you keep an eye on? U.S. stock markets. I think the markets are still overpriced, so they could be moving down lower. And don't panic. It's no time to panic. This is a market that's long-term. If you're long-term, and most of us are long-term, those are approaching retirement, that could be an issue. I'm not advising you to sell, but there could be some downs. I think there will be some downs. Finally, look at Chinese growth again. They're saying they're growing at 7%. We would die for 7%. Well, is it 7%? I don't know. No one knows. They manipulate. That's the Chinese officials, the bureaucrats, the government officials manipulate the numbers. So who knows what it is? But we would love to have 7% here. We're about a third, less than a third of that. So keep an eye on that, because it does spread across Asia, and of course does get telegraphed back here. They do tend to reduce the value of their currency, the yuan. They reduce it. Why do they reduce it? So they can sell more to us. Now, that's no way to run the economy, but long term, that's the Chinese. They don't ask me, they don't seek my economic advice. If they did, I'd tell them, keep your hands out of the economy, but they're not going to. So that's our economic report for the month of August. Here I am, Ernie Goss, on the first business day of September, telling you the economy is slowing down a bit, the growth, the less inflationary pressures, but it's still not that bad. And so until we meet again, Ernie Goss here with with Creighton University in beautiful downtown Omaha, Nebraska, saying, between now and then, may your economic cup runneth over, and thank you.